morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, September 17th. Hope all is well with you guys. As mentioned earlier this week, we got quite a bit of data to go over this week. Monday was the lone exception, and today, as you can see, we got quite a few data to go over. We'll start with what we get every Thursday, the initial jobless claims. And last week we had 893,000. The report came out that 893,000 people applied for unemployment for the first time. Forecast is calling for in this week's report at 870,000, and it came in a little bit lower, 860,000, which is relatively good news that we're getting fewer and fewer people applying for unemployment for the first time. Now we also get housing data. Housing starts, basically new construction for the month of August. In month over month, these are analyzed units. On July, it was up at 1.49 million. It was supposed to increase to 1.52 million. However, it decreased to 1.42 million in the month of August. Also, we have building permits. These are the kind of future housing starts. And month over month in July for annualized units, so it's at 1.48 million. Forecast was calling for 1.55 million. However, that one scaled back slightly to 1.47 million. Last but not least, we got manufacturing in the Philadelphia area, which is the Philly Fed manufacturing for the month of September index. And we had a 17.2 in the month of August here, and forecast called for a 13. And it came in a little hotter than forecast, but still down from the previous month at 15. These are still pretty good numbers. Anything above zero is considered expansion or growing, and this is obviously a decent number, especially considering the circumstances, the current environment we're in, and seeing manufacturing kind of coming back a little bit. So we'll take it. We'll take this win. Let's jump over to the headline news, see what's going on with the markets. Stock markets are down. It's kind of feeling the effects of it. Yesterday's FOMC announcement. It's not that it was a negative tone or anything. It was just that it's more. It didn't really provide the wow factor I think they were looking for. It basically left the rates unchanged. There's still questions about the long-term effects of the average inflation rate, where they're going to go with that. They're still going to be buying mortgage-backed securities or bonds with the quantitative easing, approximately about 120 billion a month, I believe it is. So a lot of that stuff is relatively good. It's just that I think it didn't provide any real spark. I think the tone of it, where basically he said that this road out of recovery or out of recession could be a little bit longer than expected, and that's kind of what's I think deflating investors' moods a little bit about it, and that's where it's bringing the stocks down. So Fed feels that this is not going to be something immediate jump out, and I think that's what, of course, investors are hoping for, or at least a quicker recovery. But I think the tone was that caution was that we got too many uncertainty out there, and that this could be a little bit longer than we anticipate or really would like. So let's jump ahead, see what is playing in the bond market or mortgage-backed securities and what mortgage rates are doing. We were up earlier this morning. We were even testing the 25 and 50-day moving average. We're up much greater. East Coast may have seen a little bit better pricing. However, it's scaled back quite a bit, and right now we're down for the day. But however, we're still up 3 basis points from where we left off yesterday. So we got this wick here. We need to kind of watch, see where this what this will translate by the end of the day. But as of right now, it has pulled back, so rates will remain unchanged from yesterday's pricing, where we're at. We're still below this 25 and 50 moving average. Hopefully, we can get above that double layer of support or double layer of resistance, really. And let's see what yields are doing. Yields the same way. They were testing its 100-day moving average. As you can see, we got these long wicks here, and up against its 25-day moving average. Right now, it's sitting right about 0.68. In that same range. We've been seeing this kind of range here for this week, pretty much this whole week here, and we'll see if we can move one direction or the other direction. All right, so that's pretty much the wrap for the day. Mortgage rates remain unchanged, so not any movement there. If you guys are in the market to refinance or purchase, I am a loan officer. The company I work with is a national lender. I'll leave you a link at the end of this video. Also in the description, you can go ahead and take a look, may answer any questions you might be having out there regards to different loan programs, different questions on the process, different whatever questions you might have. If we don't have it on the website, you can feel free to reach out to me. My contact information is on that website, so please feel free to reach out. We can certainly help you in many regards, from refinancing, We also coming up with different strategies to getting pre-approved so you can buy your property and then providing the finance it. We have quite a few loan programs out there available, and again, just feel free to watch out and just stay tuned for the end of the video. You'll see a link. You have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye bye.